Let's talk about the differences between public accounting and industry, particularly the career path, salary, and when you might want to consider making a switch. If you're a CPA in public accounting considering a change, thinking about exiting the Big Four, or if you're fresh out of college deciding between public accounting and industry, this video is for you. And if you've made the pivot already, let us know your story in the comments. Alright, in accounting there are two career paths, public or industry. In public accounting, you're working for a firm providing services like audit, tax, and advisory to multiple clients. It's fast-paced and demanding. As one accountant on Reddit put it, public accounting jobs are like a finishing school for accountants, or maybe a rock tumbler. They take a large number of new graduates and throw them in together and stir them up until they take the edges off. Industry accounting, meanwhile, means working internally for one company, dealing with things like month-end closes, payables, and receivables. Think stability, less grind, and less chaos, but potentially slower career progression. Let's be real, public accounting can be brutal on your work-life balance, i.e., there is none. As you may know, it's not uncommon to put in 60 to 70 hours a week, especially during busy season. But you do learn a lot very fast. Industry? Well, here's how one Redditor humorously put it. Public accounting equals death, industry accounting equals life. If you value that predictable 40-hour week, industry might seem like the better deal. You can sign off at 5 p.m. and it's rare you'll get a call after. Now, let's talk about money, long-term, not just starting salaries. The big question is, where can you make the most? In short, public accounting gets you to the money quicker. If you start in public accounting and work your way up, you could be looking at earnings of $120 to $150K a year around the 5-year point when you reach a manager position, and then reach $200K plus and much, much higher when you get to the partner level in the 10 to 15-year range. In industry, if you start as an accountant and work your way up, it's a slower climb, but also a steady one. After 7 to 10 years, you'll start getting into assistant controller or controller positions, making $120 to $200K a year. From there, your compensation may increase as controller, or you could move up to a CFO role, which is often earning more than $500K plus, but you often have to wait for these roles to open up in the company or other businesses in the industry that you've been building experience in. That can take some time. Starting in public might shave off 3 to 5 years to get to those high-paying roles compared to starting directly in industry. Consider this from Bill Hanna, the financial controller on YouTube.
This first 2 to 3 years are almost like dog years. So in human years, those 2 to 3 years are most likely something like 5 to 6 years, just because of the fact that you work late, you get exposure to so much as far as working and training in public accounting.
This means that if you're aiming for a controller or CFO role, starting in public and grinding it out until you land a job directly as a controller or CFO can shave 3 or more years off the journey compared to starting in industry. Let's talk about what makes public accounting such an effective launchpad for high salaries. The exposure. You get to work with various industries, different business models, and you deal with complex financial challenges early on. That mix makes you highly desirable when you move into industry, especially for leadership roles. And when it comes to becoming a CPA, public accounting is a huge advantage. You get the supervision hours you often need in most states automatically because you're working under a CPA. That's not always guaranteed in industry roles, which can delay your progress. Now, if you're considering making the pivot to industry accounting, most CPAs find they need to brush up on a different set of skills. One Reddit user who made the switch says, you need to complement your skills with some modeling and maybe even SQL. Fortunately, it's not hard to learn. Here at Wisdify, we've got a bunch of awesome CPE credit courses to learn the skills you need to thrive in industry accounting roles, from budgeting to modeling and forecasting, and earn NASBA CPE credits at the same time. I'll put a link below the video so you can head on over there and check them out if you're interested. So which is better if you're chasing those high salaries? Public or industry? If you want rapid progression and the chance to make it to partner, CFO, or high-level financial management, public accounting is your best bet. The exposure and skill set will make you a prime candidate for those roles, but remember, it comes with stress, long hours, and the demand for consistency. Industry accounting, on the other hand, offers stability, better work-life balance, and predictability. If you want to make it to controller, it's still achievable, just slower and steadier, and in some cases, you could still end up earning $200K or way more comfortably. The climb might take a bit longer, but for those who value time away from work and a less hectic career pace, industry accounting is ideal. Ultimately, there's no one-size-fits-all answer. It's about what aligns with your career ambitions and lifestyle. Many CPAs find it best to endure the public grind for 5 to 7 years to fast-track their way into higher-level industry accounting roles where they can enjoy life a bit. On that note, if you've made the pivot from public accounting to industry, let us know in the comments. I'm calling it a wrap and signing off.